Hello, chart watchers, and welcome to this Wednesday, May 22nd, 2019 Market Watchers live show with your hosts, Tom Boley and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on today. So far in the market, we've got the Dow Jones Industrial currently down 63 points, the S&P 500 down 5.5, the NASDAQ down 24, the Russell 2000 down 12, so underperforming once again on a relative basis. 10-year Treasury yield down almost 4 points today, 4 basis points, 2.39%. Volatility index, despite being lower today, the overall market being lower, volatility index is actually down to 14.7. That's good news for the bulls. Consumer staples rallying a bit today, leading the market to the upside, while energy suffers from crude oil prices dropping. The XLE, you can see, down more than 1%. Clearly the laggard on the session. The home improvement index getting the second punch today. Yesterday had to suffer through the Home Depot earnings, gap down, rebounded. Today it's lows, and so far there's no rebound in the home improvements area. Apparel retailers also struggling with some earnings reports out. Semiconductors once again down. Trade war discussions and so forth hurting that group, as well as the repercussions from Huawei. Target Corp, one of the companies being rewarded with its earnings results, up 9% today. Really nice jump here for Target. As I mentioned, Lowe's, you can see the reaction not so good today. The stock down more than 10%. Nordstrom's, when will it end? It just keeps going down. Today comes out with earnings down another 9%. Really bad earnings report. And then finally, Qualcomm. Problem here is the district judge has sided with the FTC in an antitrust case, saying that Qualcomm strangled competition by charging unreasonably high royalties for its patents. So the stock, you can see, getting hit pretty hard. This is one that was on fire after a recent settlement of its dispute with Apple. The stock went from in the 50s all the way up to 90 in about 2 weeks. It has come back down. Very, very volatile action on Qualcomm of late. So, Aaron, still not getting any clear signs here in the market, just back and forth as the market consolidates.
Yep, exactly. I mean, who's going to take control for real here, the bears or the bulls? I mean, I know the bears have been working pretty hard here, but I don't know.
Yeah.
Bulls are trying to take control again. You know, we've had a lot of good outperformance in some of those aggressive sectors like we've been looking at over the past few days.
Yeah, I get good vibes from the volatility index moving lower and lower, because as the fear comes out of the market tends to handle bad news better. And you can even see today, I mean, they were talking about the trade wars, and yet we've got the S&P 500 down 5 points. A couple weeks ago, probably would have been down 30 at this point on the S&P. So I do think the market's handling the bad news a little bit better. And I think that volatility index is one signal of that.
Mm-hmm.
We do have a special guest with us today, Larry Pesavento. Larry, how are you doing this morning?
I am pretty good. I'm pretty good. Everything's okay.
Cool. It is great to have you on the show. I believe this is the first time that you've been on with us.
Yes, it is.
Yeah, and I know you were telling us you do some radio, an hour show a day. I used to do radio myself for a few years, so I know that very well. So this will be old hat for you.
Oh, yeah. I do a 1 hour show, 9 to 10 for TFNN, Tiger Financial News Network. I've been doing it for 12 years and enjoy it very much. It goes all over the world, and we get some great guests and some really good, really good questions and stuff. So this will be fun for me. I enjoy this part of the situation as far as the education, because what I do is not done by very many people. It's a tiny bit esoteric, but really, if anybody can add, subtract, multiply, and divide, they can do this without any trouble. So I hope they enjoy it, but okay. I'll enjoy making the presentation, and that's what's important to me.
That's exactly right. We want to make sure you're happy. Yeah, I know you're going to be, well, you said that you trade futures and FOREX.
FOREX. Mm-hmm.
So that'll be something a little different.
I can do any stocks, though. Anybody wants to look at a stock, I can certainly pull it up, and because they're the same. The difference is the leverage, of course, and the liquidity. You know, the liquidity with the FOREX is supreme, and most of the futures are pretty good. Whereas stocks, you've got a lot of stocks to look at, but to pick the right ones is a little bit more beyond my pay grade. So I like to keep it as simple as possible.
Yep, always, always. Well, we're going to have you back here in about 15 minutes if you'll hang around with us, and I'm sure our viewers will look forward to your presentation.
Okay, thanks a lot, Tom.
All right. Erin, why don't we go ahead and get started?
Absolutely. What is the upcoming schedule? Well, it's always a great week coming up on Market Watchers. Julius DeKempenaar, Mr. RRG, will be here tomorrow. Monday, sorry guys, but we won't be having a show. The market is closed. Tuesday, I will be doing a workshop. I'm not sure on what just yet, but I'll keep you posted. And then we have Larry Williams coming in next Wednesday, so stay tuned for that. Today's agenda, however, we just met Larry Pesavento. He will be coming in to tell us about the truth behind technical analysis. 10 and 10, our very first symbol will be AT&T. And then we will finish the show with, are you buying this? We'll talk about that more when we get there. All right, Tom, technical news and headlines. What's going on?
All right. Well, we're going to jump right into the 10-year Treasury yield. The only thing really coming up today that I saw was we do have the FOMC minutes coming out at 2 o'clock this afternoon. So traders do like to see if there's anything in there maybe that they can trade off of. So sometimes around 2 o'clock when the FOMC minutes come out, we do see a little bit of volatility. So that might be something to look forward to this afternoon. But as far as what's going on right now, you can see the yield is down today. So I'd been commenting on all these hollow candles, suggesting that a lot of folks were jumping into treasuries at the beginning of the day, sending yields lower. But by the end of the day, we were seeing that money coming back out, yields moving higher and finishing with these hollow candles. Today, so far, that's been different. We do see not only money going into treasuries to start the day, but it has continued moving in, and the yield has continued dropping. I really want to watch this 235, 236 area. A breakdown of that area to me sends one of two messages. Either our economy is not nearly as strong as maybe it was made out to be after the last GDP report, or it could simply be the bond market sending the Fed a message that deflation is the bigger concern, not inflation, and that they need to be cutting rates, not raising them. So depending on which side of the camp you're on, I think the message is one of those two if we get this breakdown. And certainly at this point, we're trading below that 20-day moving average on the yield, starting to roll back over again. Let's watch 235. Earnings reports. There were some good ones in here, but also some not so good ones. And we'll take a look at the charts in just a minute. But check some of these numbers out. Look at that first one, Nordstrom's. I don't know what's going on with that company, but it has really been struggling technically. And now we are getting the fundamental news to go along with it. They lowered their guidance going forward. It is just one ugly mess at Nordstrom's on the chart and fundamentally. And I know that anybody in that stock is just waiting for the bleeding to stop because it has been a very, very rough road. We'll look at the chart, but I think it's down maybe close to 50% within the last year, maybe the last 8 or 9 months. So Nordstrom's having a rough go of it. Toll Brothers, though, came out very strong. Nice report there. They beat on their top line and their bottom line. Lowe's had a mixed picture. They beat on the revenues, missed on the bottom line. Of course, Home Depot yesterday disappointed at the open. Target, great report there. Good reaction. So anyway, let's get into some of these charts and take a look at what's going on here. And I'm going to start with that Lowe's report. So, yesterday it was Home Depot. Gap down and then rallied. Actually, before we take a look at this one, I'll come back to this. Let's see what's going on with Home Depot, because yesterday we gapped down with earnings, rallied back, good volume, but couldn't sustain it. Now we're starting to roll back over again. Home Depot down about $2 2/3 today, and we move back to Lowe's, and we see essentially the same type of thing. Yesterday got a little bit of a relief because everyone jumped back into the group after Home Depot reported its quarterly results. But look at today, Lowe's jumping back down 11%. And threatening the March low. And remember, this is when we had a lot of the volatility in the market. Not so much now. So Lowe's just simply underperforming what's been going on. And this one was more of a surprise to me because of how the stock was reacting relative to the home improvements group. This has been one of the better stocks out there. They beat on their top line, as I mentioned, but they did come up 11 cents short on their bottom line, $1.22 versus $1.33. And the market, if you're in one of these stocks that looks pretty good, but you're in a group that doesn't look so good relative to the S&P 500, you don't want any disappointments. And right here, we certainly got it, and stock trading off pretty big today. Let's take a look at Target, because Target was another one that had a very, very solid report. Look at the volume coming in here. Already 12 million shares. We're not even the halfway point of the day. This looks like it's going to be the heaviest volume day of the last year, and we are up with a hollow candle, meaning that after gapping up, everybody wanting to get in, you got market makers on the other side of the trade, providing liquidity on the short side, selling, and the stock keeps going up. That, to me, is a very good sign. I think we've got some serious demand at this point, unless we get a big reversal late in the day with a failure, leaving a tail above the 50-day, maybe closing back below it. That would be bearish short term. But other than that, I think things are looking pretty good here on Target. PSTG, this is Pure Storage. Look at the big move down here. This is a company that missed on the top line, missed on the bottom line, and just guided in line. So there was just nothing for traders to get a hold of here. And this is a stock that was well off its relative high versus the computer hardware space. And as you can see, computer hardware in general has been going down. So you've got a underperformer in an underperforming group and then a bad earnings report, and this is the result. Stock getting hit by 23% today. ADI, Analog Devices. This reaction is interesting for a couple reasons. Number one, they beat top line and bottom line, so they came in with a good report, but they guided Q3 revenues and earnings per share lower. And I've said in the past, I would rather have a company beat top and bottom line and lower than to miss top and bottom line and raise. And the reason being, if a company's just beaten, it means that management is executed. If they're lowering their guidance, to me, that's a good sign, because they're at least being honest and saying, hey, these numbers we had out there, we're not going to hit them. They should have a little bit more credibility because they did just beat the estimates in the prior quarter. What I don't like is a company that comes out and misses and already demonstrates they can't be trusted to meet their numbers and then raises their guidance. It's like, well, we couldn't trust the numbers you just gave us. Why would we trust the ones you're giving us for the next quarter? So I just like companies that beat top and bottom line. And apparently Wall Street agreeing with me, at least on Analog Devices today. After gapping a little bit lower at the open, we are seeing some buying. A lot of overhead resistance, though, to try to negotiate here. Got some gap resistance, price resistance, the declining 20-day moving average. If we get back up close to that 105 area, I think that's going to be an interesting area to see whether or not we can get above that. AAP, this is Advanced Auto Parts. Pretty good reaction so far, but we are off the earlier high. This is in the specialty retail group, which is leading today. It's actually one of the better groups out there. And when we look at Advanced Auto Parts, this has actually not been one of the best stocks in the space. So looking at the chart, yeah, I mean, we got a nice reaction. They did come out and beat top and bottom line. One other positive here with Advanced Auto Parts is they did authorize a $600 million share repurchase this morning as well. So had some good news, got a good reaction, but we're well off the earlier highs. I see this more as a mixed chart. We are in an uptrend. We are sideways consolidating, but the specialty retailers group had actually broken out the new highs. So sideways consolidating doesn't seem so great when you consider that the group overall had broken out. So good report, decent reaction, nice authorization of a repurchase agreement, but I think I'd probably look for something else in this space. One last one. Let's take a look at that Toll Brothers reaction, because it was up earlier. We gapped down, then it went positive, and now it's back down again. But we are in a very strong group. Unfortunately, Toll Brothers has not been a great part of that group. So there are other stocks out there. I believe it's WLH, which is William Lyon Homes. This is one that over the last 5 months has been outperforming. And I want to say Taylor Morrison, maybe. Let's see if I get this ticker right. There we go. Taylor Morrison. Look at this gap up, trading much higher, and look at the relative strength the past few months here. So there are some other stocks I think that are doing better more recently, outperforming an outperforming group. When I say outperforming group, you can see this down below. So anyway, I think that there are some better options in Toll Brothers, even though Toll Brothers did come in with a really nice report, beating on top line and beating on the bottom line. All right, Erin, upgrades, downgrades, what you got today?
All righty. There weren't that many actually in the queue, but I picked 6 of them that looked interesting. So let's go ahead and start off with Diamond Offshore. Diamond Offshore was upgraded today by Piper Jaffray from an underweight to neutral. So not a great vote of confidence there, but moved up to neutral. They've adjusted their target from 940, of course, down here, to 875. So really they're looking at it. I know that seems strange. You get an upgrade and then you see the target lowered. But if we're moving into that neutral position, it looks like they're expecting more sideways movement, not a whole lot going on here. I've got a PMO that is topping below the signal line. It looks like it's headed down to the bottom of the trading range. So, well, it was upgraded, but only to a neutral, and I can agree with that. Ericsson was upgraded today by B of A Merrill from a neutral to a buy. They didn't list a target. I think this chart looks pretty darn good. You've got a PMO buy signal that's happening right now, right today, on this nice gap up to the upside. You may need a little bit of a pullback here to the 980 level, but I think this would be a great level if you put this on the watch list, if we can get back down there and then look for that move back to the upside. But, with that big gap, might be looking at a little bit of an island, might need to pull back here a little bit before it can move back up. But this is a really nice sign. Nice rounded bottom on that PMO. It's now above the 0 line. Look at the scooter and the OBV. Look at the volume that's coming in behind this move. So that's looking pretty good. Might have something to do with some of the questions going on with the T-Mobile, I think, and Sprint acquisition going on. All righty, next one up, FLIR Systems. Imperial Capital has upgraded it from inline to outperform. They have moved their price target from $56 up to $57. Let's go ahead. I'm going to put this on an annotation tool just to give you a quick peek at the support and resistance levels. So looking at this prior top, and this kind of lines up here with the lows back here and the tops back here. Currently, we've got a move within this trading range. It looks like it was going to come down and test the $46 level, but it's now decided it wants to break out back above the 20-day EMA. The EMAs are still configured fairly positively here. So I would be looking for something good out of FLIR Systems. It's in that defense area, and I've been wondering to myself whether we're going to see any with some of the unrest going on, let's put it that way, with Iran and all of those, whether our defense stocks might be doing better in the future. But I think I look at technicals. I don't think about the others. It might bring something to my interest, but I'm not going to trade off of, hey, we're getting ready to have some problems in the world here, so let's move to defense. All right, this one we can see Redfin. This one was also upgraded. DA Davidson upgraded from underperform to a neutral, and they have moved their price target to $16. So they're not really behind this stock, but they're not really ready to say it's going to test lows back down here to that November and December lows. You've got the big gap down. I would look for a move to the upside to cover that gap. You've got the PMO turning back around, scooters starting to improve. But that 50 is getting ready to cross below the 200. This just doesn't look like a real positive formation to me right now. All right, next up are our downgrades. Stevens & Company downgraded Activision Blizzard today from overweight to equal weight, and they have put their target to $52. So they're looking right here at this area of overhead resistance as the next spot for price to make it up to. We've got a test here of this short-term, very short-term low. We've now dropped below it. I don't like the look of that, and you've got moves ready to go down to test these support levels at $40. PMO, you've got declining tops. It's now in the 0 category. I wouldn't look for it to hold this short-term area of support at 42.50. I would be looking for a move down to $40. Expedia was downgraded today from buy to a hold by Argus. You can see the PMO is trying to make its way back up, but overall, I don't think this is really a great chart to look at. Maybe a short-term double bottom here, but again, there you go, 50 almost crossing below the 200-day EMA. That's a long-term trend model sell signal for a decision point. I would look the other way at this point, so I'm on board with that downgrade. And that's all I have for upgrades and downgrades. Here are the ones that I went over and the ones that I did not. And I'll have that up in the Market Watchers live recap later this evening. It is time, though, for our special guest, Larry Pesavento. Are you there, Larry? Are you ready to get started?
I am here. All I need to do is to get that PowerPoint ready to go, and I think is a share screen still working?
Yeah, but we don't see your screen just yet.
Okay, it should be coming up.
Indeed. And I guess we're going to hear the truth today.
The truth as it's made in Philadelphia, Pennsylvania. I'm here for the birth of my third little grandson. He's going to be coming here on the 13th. We got a 5-year-old and a 8-year-old, and boy, they keep me hopping.
All right, we still don't see your screen. Go ahead and push that share button.
Let me get back to that. Let me get out of here a second. Maybe hit the share button again, or should I?
Yes.
That's what I'll do. I'll hit the share screen button again, and that'll get me up here. 10-4, 10-4. We're ready to go. Yep. And then I just want to get to the beginning and slideshow from the beginning, and then we're ready to go.
All right.
Okay.
All right, let's do it.
All right. Hey, thanks, folks, for joining me today. My name's Larry Pesavento. I've been trading since 1959. BS degree in pharmacy, a couple of MBA degrees in finance, and I've been doing this for a very long time. I don't want to go through the stuff that I've done. That takes too long, and we've only got 20 minutes or 30 minutes. I want to share with you what I think is the most important thing about technical analysis. This has been a long journey for me. Trading is a journey. It's not a destination, because you always learn. And I'm going to be 80 pretty soon, and I'm still loving it as much as I did from the first day I started trading. This is a picture. It's actually a portrait, almost life-size. It's in Los Angeles at the Manly Hall Institute for Metaphysics. I think they've moved since when I used to go visit them up on Mulholland Drive. But this was a painting done by Augustus Knapp in 1926. He was a close personal friend of Manly Hall, and since there was very little information about Pythagoras, he pieced together from bits and pieces and scraps over the years of what Pythagoras was all about. He was born in 600 BC. Albert Einstein said there was God and there was man, and in between was Pythagoras. Pythagoras was really way ahead of his time. You stop and think 600 BC, you'll notice on the left-hand side of the desk there, you'll see a globe. He not only knew that the Earth was round in 600 BC, he knew that the exact miles between the Earth and the Moon was 256,000. He did that through his famous Pythagorean theorem. What I want to point out to you here is what we're looking at in some of these charts. You'll notice that on the right-hand side of his hand, he's holding a pyramid. He's pointing to a pyramid on the parchment. You'll see the proportional divider on the table. On the left-hand side, over by the Safariol and the musical instrument, you'll see another proportional divider. But the important one to look at, folks, is on top of his head, you'll see a little triangle with 10 little dots. We're going to talk about that as we move on here a little bit. The reason for this is that he being the father of geometry, Einstein was very, strongly involved with mathematics and geometry and stuff like that. And all I'm going to try to do is to show you how to take a technical chart and break it down into its basic components. This is nothing hard to do. If you got a calculator and you can add, subtract, multiply, and divide, you're home free. It's really, really that quick. So we're going to go through a series here of about 16 slides. I'm going to give you a rough idea of what I'm looking at. I'm going to show you a few examples, and then I'll answer some questions for you if I can. I've only got you for half an hour, and it takes at least 1 hour to become a professional trader. So you'll have to do that that other half hour by yourself. The next slide we're going to look at is for the Spira Mirabilis. This is the chambered nautilus. This is what Fibonacci is all about. This is the mollusk that we see, the ammonite. It's the oldest living thing on our planet. You see it as the seashell, but you'll notice the distance between C and B is 0.618 of the distance from A, and all it's doing is contracting and expanding. You'll notice how it's expanding like this. That's how the universe moves, and it contracts the same way, and it's always either going up or down. By the time we're finished with these next few slides, you'll see that the market is really a very, very predictable thing to look at when you break it down into these simple patterns that I like to look at. Now, I don't do Elliott wave. I understand Elliott wave. I have a rough time with these patterns that are the 3 waves and the 2 waves. I see the 5 waves very easily, but the counting that they do is a little beyond my pay grade, so I keep it as simple as possible so I don't have to do those complex inner fives and all the other stuff. But it certainly does work. The difference is that mine is a little bit simple. I actually have the same birth date as Ralph Elliott, July 28th. And anyway, he passed away in 1948, and I was 8 years old at the time. Anyway, let's look at the next slide right here. This is the one that's really important, folks. Don't be concerned about the stuff that you see up here about the Mercury and Venus. This comes from a little book called The Little Book of Secrets by, I believe, William Daniels, and he's basically showing, the harmony that's in the universe. And here's where, if you look in the lower left-hand side, right here, you'll notice where you see the 1.618, you see the 2.618, the pentagram within the circle. We're going to break this down to show you what a chart is all about. But to the right of that, you'll notice the Fibonacci sequence. You can see 1, 2, 3, 5, 8, 13, 21, 35, 50, 589, 144, and then, of course, out to infinity. But what's important here and what people don't realize, you can pick any 2 numbers at random. Like instead of doing 1 and 1, pick the number 311 and take this number as 712. And add those 2 numbers together and keep doing that iteration through the whole thing. And when you get down to that 8th iteration, which will be where you see 13 plus 21 equals 34, you notice that the market starts going from 0.6178 to 0.6182 to 0.6180 to 0.6180. It's always either expanding and contracting, and it does that for infinity. And that's why it's important, because the next slide is going to break this down from somebody who's a whole lot smarter than this old cowboy. And this is from Dr. Andrew Lowe at MIT. He wrote a book. Well, he wrote a book, but before he wrote the book, this was an article he had in Business Week in April the 17th of 2000. He wrote that this alchemy may yield real gold. And what he did was, over a period between 1962 and 1996, he looked at over 800,000 patterns, and he found out that these patterns, not only were they predictable, but they repeated with great regularity. So he wrote this book called The Non-Random Walk Down Wall Street that was published in 2001. If you'll remember, those of you that were around at that time, this is when we started seeing more and more charts being brought out by CNBC and Bloomberg and, of course, everybody else, because they had the blessing of MIT, which is, academia at its highest, and he's in charge of the financial engineering who brings all the quants to Wall Street. Dr. Lowe also manages a $3 billion nonprofit hedge fund for cancer research that he's profitable with in an incredible amount. The difference was when he wrote this book, The Non-Random Walk Down Wall Street, he was going against Burton Malkiel, who wrote a book called A Random Walk Down Wall Street. But what Dr. Lowe said, yes, the market is chaotic in nature, but within that chaos are non-random patterns that repeat, and they are predictable within limits. And that's what we try to do as a technician, is to understand what we're doing here. Now, if we break this down simply, this is the triangle over the head of a Pythagoras that we looked at. I just want to show you the complexity that Dr. Lowe did here. This is known as the Sierpinski triangle, also known as chaos theory. And basically what it means is if you can draw these little dots in between these triangles. By the time you've done 10,000 of them, you're going to have a diagram that looks like this. These are some of the complex formulas that are in Dr. Lowe's book. I mean, he had such stuff. I bought that book at 700 pages. It was so far above my pay grade, I gave it to the smartest person that I knew to see if he could figure it out. But I already knew it because I had, been doing it for a long time. It's just that he mathematically proved why these things actually work, and I think that's important. But let's just take a look. When we're looking at a price chart, we're basically looking at a square, and within that square are the two right triangles. You can see the Fibonacci relationships here on the hypotenuse of the triangles. Within the triangle, it has a pyramid. It also has a circle. And when you put it all together, you get to something that looks like this. And we get over to the right side is what you're looking at when we're looking at a price chart. You got your X and Y axis. And what you're trying to do is to find a point on that X and Y axis that makes you feel like, maybe I've got a little bit better than even money chance to see whether these patterns are going to work or not. And that's the key to what we're going to be looking at here over these next few minutes that I have you here. Okay, the next one that we want to look at here comes from a little bit more advanced book. This was the Torque Analysis of Stock Market Cycles by William Garrett. It was published in 1972 at roughly the same time that the book by James Hurst came out, The Profit Magic of Stock Transaction Timing. I was fortunate enough to have Jim Hurst as my customer when I was running the Drexel Burnham operation there in Beverly Hills from 1976 through 1982, and I became good friends with him, and he was certainly very brilliant. But this young man here, William Garrett, did a great deal. What he's doing, he's taking that same thing that we looked at with the square and the circle, but what he's doing is he's bringing it out and making it into an ellipse by using the expansion of the Fibonacci numbers at 0.618, 1.618, 2.618, and of course pi, which is the circumference of the circle. Now, I know most of the people out there that are listening have a lot of trouble with Fibonacci numbers because they get a lot of misinformation because they have a lot to tell you, but you have to be able to read between the lines of what you're trying to look at. You're not just looking for one number, you're looking for confirmation from other areas. And that's one of the reasons why, Elliott Wave is so popular, is because it does that type of analysis. Now, the next chart we're going to be talking about is this is what you're doing when you're home. You can do this by yourself. I look at basically the four ratios of the Fibonacci sequence. 618 and 786 are contracting ratios. 1.27 and 1.618 are expanding ratios, and the ratio of 1.00 is an equal ratio where you see equal moves, also known as the ABCD pattern that we'll cover in just a little bit. But all this is very simple to do. You don't need a really fancy computer, just a pencil, a straight edge, and a calculator. You can do all this. In fact, I suggest to my students that that's how they learn it, because you can see how simple it is once you do it that way. Trying it with a computer, and believe me, we have all these fancy things with computers now. It does make your work be a little sloppy sometime if you don't do it yourself. Okay, the next one, this is, I want to get to you why Fibonacci is so important. This is Leonardo da Vinci's famous Proportions of Man out of his book, The Codex. If any of you have read anything about da Vinci, you know that he was a tad bit paranoid. And if you read the top of that up in Latin, written in Italian, it is written backwards into a mirror. And basically, da Vinci was ambidextrous. He could write with both hands at the same time and write backwards at the same time. And he wrote this backwards into a mirror, and that's why the book is named the Codex book. And what he's showing in this book are the ratios and proportions of the human body. You can see the triangle there from the top of his head to the pubic crest to the bottom, your ulnar, radial, and the femur and tibia. All these relationships come out to, on the far right, you'll see 0.618. That's what you're looking for. All these different relationships of the human body. You see it in insects, sunflowers, everywhere. That's just a little bit of the history of it. And I wanted to go one step farther and show you this was out of the pyramids. And if you'll notice the left-hand side there where you see the 1, 3, 5, 8, 13, 21 expanding spiral there, that is basically the DNA spiral that we look at, all based, again, on that 0.618 number that we deal with. How your chromosomes line up along this is dependent upon, what your ancestry is. This diagram here is the main reason there's never been a conviction of murder in the southern Louisiana swamps. And the reason for that is they all have the same DNA. Now, that is the end of the joke part of the presentation. All right, let's get on to the markets here, folks. I trade foreign exchange quite a bit. I don't do very much in stocks because they don't trade 24 hours a day, 5 days a week, and I do a lot of that. But the euro is the greatest thing to trade. The euro versus the U.S. dollar trades about $1 trillion a day. You know, many times more than stocks and bonds. But if you look at this chart, this is going over, of course, a 30-minute chart going over about the last 5 days. You'll notice that it doesn't show very much. So, gee, there's not really much here. If you looked at it, you can see some support and resistance. But what we're looking at are these patterns that you're going to be seeing. And remember, in the previous slide, I talked about 4 ratios: 618, 786, 1.27, and 1.618. All I'm going to do now is just overlay those ratios on top of this chart, and voila, you'll see that many times, because this is a downtrend, you can see lower tops, lower bottoms. So as the market rallies up, you're going into these Fibonacci relationships, and that's what you're looking for, is to try to find a place to be a buyer or seller. Now, you notice at this spot right here, we have 2 ratios coming together: a 78% retracement from 2 days ago and a 61% retracement from 3 days ago. So that gives you a further confirmation that this might be very important. Now, there's also some patterns in here that we're going to be talking about in just a little bit, because this is what we're looking at. See, because all the market ever does, it only does 3 things, folks. It either goes A, B, C, D to the downside, correct? Or it does A, B, C, D to the upside. That's what we're looking for. Now, let's just move on to the next slide that we're going to look at that shows you this pattern. This is out of page 249 of the most expensive book ever sold to the financial markets, called Profits in the Stock Market by H.M. Gartley. Harold McKinley Gartley wrote this book in 1938, and he sold it for the price of $1,500. That was the cost of 3 Ford automobiles, folks. He sold 14 different versions of that book. It was a 3-ring binder. It wasn't printed. 3-ring binder, and it's been in print now for quite a while, because I've been teaching this stuff for 35, 40 years, so it's become relatively important. But basically what he's saying here, that the market goes up in stages. You can see A, B, C, D. That's what it does. And you look to be buying on these here. You're following the trend. These are the channels that you look at. So you're trying to find this particular A, B, C, D pattern. Sell at D, buy at C, buy at E. That's what you're looking at. That's a bullish side of it. The bearish side is the market goes down. A, B, C, D to the downside, rally up, just like we saw in the euro just a little while ago. Now, remember that the market can also go sideways, and that's also very important. So the next one we're going to take a look at here is, we'll quickly move over to the where we want to get to right now, and that is this is the GDX for the ETF. Now, I prepared this last week, is what I was preparing this for, is to show you what I'm looking for in the gold market. We'll cover a couple other things here, because we're going to have plenty of time for questions if there are any. Otherwise, we'll look at some markets for stocks or anything that you might want to look at here. But if you look at this GDX format here, you can start to see some of these A, B, C, D form, the patterns that are here. You can see them going on all the time. A, B, C, D, A, B, C, D. And then it has a big move down. Then you start A, B, C, D up. And all I'm going to do now is I'm just going to overlay those A, B, C, D patterns on this chart, so you can see, you know, what you're looking at. So here is what we're looking at. We're completing an ABCD pattern here in the gold index. That's the XAU. This is the ETF for the XAU. Very easy to trade, and it's basically a synthetic gold, because you're trading the same thing. But if you took the low level that you had down here around 1730 up to the high at 23 and did the Fibonacci relationship, you're right here at the 61% retracement of this move. So gold is getting ready to start rallying. And that's why we bought it. On the opening the other day, we paid a good price for it. It's up a little bit. But you'll notice here, this has been going higher for 3 days in a row, folks. with gold and silver and platinum going into the sewer, going down quite a bit. We hit 1435 in gold or silver, and we hit 1267 in the gold. So that's the main thing that I'd like for you to do this. I know you're not going to pick this up overnight, but if you could just learn to do these A, B, C, D patterns, go from low to the high, down to the low, up to the high. I mean, they work a lot more than they fail, and this is what the markets do. They either go up like this or down like this, and then sometimes they go sideways. So that is basically the 20 minutes of my fame in the business. So what I'd like to do now is maybe let me just get this done here and end the show. And if you have any questions, I'll be happy to answer any questions about any particular stock or anything that you might want to ask me about. I'll be happy to do that. So how will that work, Tom? You want to tell me if there are any questions coming in?
Yeah, we did get one question. It was about Bitcoin and just asking whether or not Bitcoin could be traded.
Oh yes. Oh yeah, Bitcoin is a beauty. If you'll just give me a second here, I can pull it up here on my chart. Here's Bitcoin. I think you'll be able to see it. Now, I didn't go back all the way to 19,000 because I don't trade this. I never have, but I have, some of my subscribers certainly like to trade it. But you'll notice that this low that we had down there at around 3,100 was the low. That was a large ABCD coming off. The actual number came in at 3,600, but from 19,800, we had huge moves down because it topped, a year ago, January, and that ABCD structure ended there. But if you'll notice the little triangles that you're seeing here, this is that Gartley pattern that we talked about with the retracement. There was your buy pattern right here, which was at 3,300. And of course, we've had the huge move up here, and now we backed off to a 38% retracement. This is a very, very bullish chart. This has legs. As long as it can stay above 6,400, we're looking at a structure for your A, B, C, D swing at least to 12,000. And 12,000 will only be a 38% retracement of the whole bear market from 19,900 down to 3,000. So that's what we're watching, in the Bitcoin. That's the one that is, really, really important to, pay attention to from my perspective.
Okay. Another question, and this is on the S&P 500. I think we have a bearish viewer looking for maybe a target on the S&P 500, 2,200. What do you think?
I think that's easily attainable. If we take a look here, I think the easiest way to do this is to, I think I can do it. Yeah, let me do it with the S&P. Hold on, this will only take a second because it's right here. I'm looking at it going down today, and we'll just I want to do it weekly because we'll be able to let the folks really see the bearishness that we're looking at here. This is a triple top, a major triple top here when you have divergence. The NASDAQ did a triple top like this. The Russell lagging very, very badly. Transportation's lagging badly. The New York Stock Exchange Index, which is the #1 thing to look at with stocks, very, very negative. It could only make a 786 retracement. I'll look at that in a second. But he said 2,200 is not a problem at all because my target that I'm looking at is right here, which is a 1.27 of this swing. In other words, if you measured from the low to the high, my first profit objective here is at 21.45 in the thing. And if you were to look at that really closely, by the time you got to that point, you'd be setting right there at this same pattern right here on the downside that you had on the upside. But let me just take a second here because I think he's on the right side of the market. But look at the bearishness that we have here in the New York Stock Exchange Index, folks. I mean, here we got this S&P up here, we've got the NASDAQ made a new high up here, and look, this is the biggest and the strongest of all of the indices. They don't trade it anymore because it's a knife. This is what they use for mutual funds, but this is terribly bearish. I mean, it really is. I mean, look at you got lower highs all the way through here. They're setting up perfectly. You got a beautiful 3-drive pattern coming in here, and here again, there's your target down in here. That's here. Now this is extremely bullish here because at this level, we were so bullish then. It was this was really the buying time of the year on December the 26th, because that hit with everything. Every single index hit a major Fibonacci pattern number on December 26th, and we've gone straight up, and now we're having the correction. Now, there is a very strong probability that this little correction that we have here could lead us up to another new high. That could very well be, but we will be coming down into, I believe, June 14th. And the reason why I say that is I do a lot of cycle work, and one of the cycles, oh, I've already deleted it. I think I sure did. Can't show it right now, so I'll have to move on to something else. Let's get it up here. I don't have that cycle work that I had, so I'll do that. But anyway, this one, I think 2200, 2100, certainly in the ballpark, fits really good. And if you looked at it mathematically from the low that you made back on December the 16th, you'll see that comes in, the 61% retracement comes in right there at your 2250 level, and the 127 is 2143. So it's in that ballpark of where you'd be looking for a move. And no one's expecting anything like this, that's for sure.
Yeah, I'm not.
My 2 cents worth. Well, hey, you know, that's why some people like chocolate cake and some people like vanilla cake. You know, that's what they make it for.
Exactly. Another question. This one on the dollar. Do you have any targets for the U.S. dollar index?
Oh yeah, I love the dollar. So just a second here. Let me get it up here. We'll just take a quick look at the dollar. Let's look at it first on a weekly basis because it's at a really critical level here. Move it up here just a little bit and blow it up so we can see it. Here's the 61% retracement of the whole move from 2017 down to here. You'll notice that what we've done here, we've hit it basically 1, 2, 3, 4, 5, 6 times. I believe we're getting ready to pop above it because if you look at the daily chart on this, you know, you'll see you're very, very close to a really important spot here because you've made a double top and then you've taken the double top out and then you backed off, and this tells you you're heading higher. And the reason why I say that is if you look at the pattern during that time, all you have to do is just to measure from your high down to your low and move it up. You'll see that we should be heading up to this level right here, about 99.25. That'll be really strong resistance up here at this level at 99.25, but I believe that's where we're going. We need to clear 98.10 first, which means the euro will go below the 111 area, heading down towards the 108 level, possibly. But the dollar still looks very bullish, but it's at a really critical level. It could turn down here in just a heartbeat because it's been up like 8 days in a row, and it's due for a correction, but longer term, it still looks very, very bullish.
All right, I have a follow-up question for you, Larry, based
Sure.
on looking at the dollar, and I don't know if you have a thought on this or not, but one of the things I talked about at the beginning of the show when I looked at the 10-year Treasury yield, the 10-year Treasury yield keeps dropping, and of course that can be a sign of economic weakness ahead. But it also could be a sign of the bond market saying that deflation is a bigger problem than inflation. So if you're expecting the dollar to continue going higher, that's going to keep pressure on commodity prices and should keep inflation low. So my question to you is, do you believe that the Fed's next move will be to cut rates or to raise rates?
I don't really care what they do because they follow the market. And here's just, let me get the bonds here, take a look at it. This is what I'm looking at. I think we can make this move up here in bonds. That's up 153.24. That would be a 78% retracement here. But here's the head and shoulders. We're really bullish bonds here because you look at this. You had a beautiful, beautiful ABCD pattern right here. Just absolutely perfect. It came up, and this seems like we're going to go higher up to the 78% level. We had a 3 drive to a top pattern here. But Tom, look at this. This is what's really exciting. Look at this weekly chart on the bond. This is a major bear market that we got here. This market topped 3 years ago. This was the end of a 32-year bull market in bonds that started back in 82. And August of 82, actually. And this is what I'm looking at. I think we're going to be heading down to this level right here. As we get to this level, which is this 61% retracement of this high, which is right at the 151 level. If we go popping through that, then we can get up to this level here, which is that area we looked at on the daily, 153. We could easily draw that in by looking at the the ABCD structure that's there. It would take you right up to that level. That's drawn in wrong, but that's the area right here you'd be looking at would be that 154 roughly would be the lower. We're not going to get any higher. We get above this, then there's something really wrong. Tom, I've been doing this for a long time, but the dumbest thing I've ever heard is this negative interest rate stuff. Give me a break. You're going to meet somebody on the street and say, give me $10,000 and I'll only charge you $250 for holding the money. Hello? That's not the way the markets work, Buckaroo.
Yeah. So short term, you think bonds prices go up?
Oh yeah, short-term bonds look pretty good. Fact is, I'm long bonds. I think they've got a chance to make this right here. Look at it. You got a perfect A, B, C, D measures exactly to the 78% retracement, which is the square root of 0.618. Takes you exactly to that price. There's the 1.618 expansion. You see it again here, 1.618. So it's going to the actual number I'm looking at is 53. It's another 4 points higher.
So do you think that there's going to be money rotating eventually?
I try not to think.
Well, you're doing a pretty good job.
That thinking gets me in trouble, Tom. I wrote a book called "Trade What You Think, Not What You See," or "Trade What You See, Trade What You See, Not What You Think." And I wish I could live by it more than I do, but I have a tendency to have an opinion too many times, and opinions are like armpits. Everybody has one, and it usually smells. So I try to stay away from my opinions. But the charts are telling me that we got a shot here. It doesn't take much. A big down move in the stock market, we get a flight to quality, and we could make that very, very quickly. Look how quickly we made this one right here. It doesn't take long. This has been a really good reaction that we've had here. But it looks like it's got 153 written all over it.
So if longer term, though, if you think that treasury bonds are coming down in price, meaning that there's going to be a lot of sellers of bonds, and there's also going to be sellers of stocks, where's the money going to go? Gold?
I hope to my pocket, but I'm not sure that's going to happen. No, I really don't think that way. I actually try not to think that way. I know it's hard to do, but I basically look. This is what's telling me when I see this. Okay, that's all I need to know. I know right here there's more selling than there is buying. Okay, and there's more buying than there is selling. That's what I need to know. Right now, there's more buying than there is selling. So that's all I need to know. If I try to start, and I swear to God to you, Tom, I don't listen to the news. I don't read the news. I haven't looked at the Wall Street Journal or Investors Business Daily, and oh my gosh, so many years I can't even remember. And my daughter dated Bill O'Neill's son, and that was her first date in high school because we lived there in Westlake Village, and so we knew them quite well. But anyway, I just can't do the fundamental stuff. I have 2 masters in that stuff. I still don't understand it.
Yeah. Well,
yeah, the charts I understand.
Yep, we're getting close to the end, but I have a couple more questions. But before I get into a couple of last questions, there are some folks that would love to know, where they can follow you, whether you have a website or newsletter or your radio program.
Sure.
Information you can share?
Well, most of my pictures are in the post office under the wanted section. You'll see those. If you go to just Larry Pesavento at gmail.com, or just go to Larry Pesavento, www. That'll be my website. I do a radio show from 9 to 10 every morning, Monday through Friday, from 9 o'clock to 10 o'clock Eastern Time at Tiger Financial News Network. That's www.tfnn. And then I write a newsletter for the hedge fund I write. I send out audio video tapes of the trades that I'm doing. I send out emails of the things that I'm doing. Those are done on a subscription basis. And if you wanted to contact me, we can do that. I also do private mentoring. I'm pretty much retired now, but when people do have an interest to want to learn this, I will spend time to teach them. But the problem is it's a little esoteric for some people, and they don't understand how just a bar chart can tell you so much about the markets. But after you've done it enough, you got to believe, because you see some of this stuff that just absolutely scares you, that it's so accurate that it's really amazing. It's just give me 1 second here. Maybe I can do this. I just wanted to show you some of the things that I've worked on that look halfway decent. I hope it's still here. It is. This is good. This is the Bradley stock market model going back just a few years here. But look at the high that we had here. Look at the high here. Look at the low here in December that we had. Remember, we just talked about it. This is all based on astroharmonic stuff for where the planets are. And look at the high here. That means we're coming down here into June 14th. That's what I'm saying. From June 14th, we'll go up into August and then back down in here. But look how accurate it's been. It's been, and this is done years in advance. That's the real key. It's really quite amazing how well it can do. Look at this. It says it should start down, and it started down. It should start up, and it started up. Started up, should be going down. So.
Mm-hmm.
But it does flip. You see here, it was going up. This is an inversion where it did exact opposite, but those happen. There's nothing you can do about that. You got to be expecting it because you're expecting it to go up and it's going down, correct? So, it's going to bottom on this date. The key dates are what's important. These dates are really spot on. Look at that. This is just, it's pretty hard not to pay attention to it.
Mm-hmm. Do you have a book that you would recommend?
Yeah, Trade What You See. That's a book that it's on Amazon. It was a book of the year one of those years ago. It's about 20 years old now, but it's a great book. It's got all the information in it. There's nothing hidden. I don't hide anything. I tell everybody what I do, and because most people are too lazy to do it anyway. So that's pretty much what I'm trying to do. If you just just Google it. It's my name and then Trade What You See. I've written 12 books, but that's the one that really is the one that you don't need to get into the astrology stuff. That's esoteric, but that will be coming. Andrew Lowe's already wrote a book called The Evolution of Technical Analysis. In the first 50 pages, he said the first technicians were astrologers. So I know the programs that he's using. So that stuff will be coming to CNBC in Bloomington in the near future. Whether I'll be here to see it or not, I'm not sure, but I know it's coming.
All right. Sounds good. Well, I knew we do need to run, but excellent presentation. Really enjoyed it, Larry. I know our viewers really enjoyed it as well. And
I can hear the sound of one hand clapping.
If anyone out there didn't or wasn't able to write down some of the websites and so forth, keep in mind that this is recorded, and you can come back in and check out that information later. But Larry, great presentation. Really enjoyed having you, and hope to see you again soon.
Hey, thanks for joining me, folks, and good luck to you, and may God bless.
All right. Thanks, Larry.
You bet.
All right. Very, very interesting presentation. And as Larry pointed out, everyone's got different views on the market and the direction on the market. So interesting discussion and a lot of interesting points that he made that everyone should be thinking about. But let's go ahead and move on, Erin, to the 10 and 10. If you are ready, we'll do the RRG.
Yes, I am. Let me get that up for everybody to see. And yes, the Stock Charts YouTube channel does have not only the shows we have recorded, but all of the Stock Charts shows, and a lot of our guest appearances are recorded separately and played separately there at the Stock Charts YouTube channel. All right, but here we are with our RRG. Technology, certainly that's where the interest lies today. And as far as the look of the chart here, I've got a lot of them moving into that green leading category. So I think there's going to be some interesting ones to look at here. Look at those northeast directional hooks. That'll be interesting. Let's start with AT&T though.
All right. I actually pulled up a 2-year chart of AT&T. I just wanted to, the overall trend, I think, still continues to be down. We did have a nice rally here over the past 2 weeks, so that's been nice. The volume was a little higher. I'd been looking for some volume to come in to support the move to the upside, so we did finally get a little bit of volume, got up to 33 and change. That's the good news. The bad news is as soon as we got there, which was gap resistance from the huge sell-off back in April, that was the first time we physically completed that gap fill. And as soon as we got there, the sellers jumped in. So I'm still a little leery. If we could get a high volume breakout above 33.10, I think AT&T could be a little bit more of a trade for those seeking capital appreciation. In the meantime, though, I just kind of feel like it's an income producer and not much more. So I'd pass still for now, but it's beginning to get a little more interesting. Just needs to get that close above, let's call it 33.25.
All right. The most popular in the chat room right now is Hexo, Hexo, Hexo Corp.
Yeah, this is one, and I'm going to go into, I don't think we need 2 years, although you can see a nice rally. You can see beautiful volume coming in. Let's just shorten it down here to a 1 year. And I think this is one that Greg Schnell had talked about when he was on the show. Now, I would have liked to have seen this stock hold price support around 7. We went a little bit below that, but did bounce off of the 50-day moving average. But here were your tops coming across. And so I thought we might get a pullback, that 20-day, maybe price support. You can see we went a little bit below it, but holding the trend line. So I guess maybe there's a couple things to watch here if you're in this one or looking for entry. I would be watching the trend line to the downside here. So I think that right there is probably worth keeping an eye on because that also lines up with the moving averages. But let's call it 680, 690. And then the recent low is now at 650. So I think this area right in here is very important from a price support and trend line support standpoint. Volume trends look great. The stock was up to 830 or so, has pulled all the way back into the sixes. Certainly the reward to risk at this point is a lot better than it was when it was overbought. See, the RSI had moved well up into the 70s at the high. So I like it better now than a few weeks ago, but I would keep a tight stop and just recognize that this is going to be a volatile stock and it's going to be a little bit on the risky side.
Okay, let's see. Let's go to the financial sector with AIG.
Yeah, I think AIG was starting to make a move. Yeah, I like that gap up here. I'm going to pull this up on a relative chart because a number of the insurance companies have been doing better. Look at the relative. Now, see, to me, this is a game changer, character change on the chart. Maybe even earlier, but especially with this gap up and heavy volume, I think that the trend is clearly higher. And as you look at this chart, I think I would be fine with this stock. I would just continue to watch to make sure that see if I can get this here. Oops, that's not what I wanted. Let's pull up that directional line. But essentially what I'm looking at here is what you want to see. It maybe is just starting, but that's great because you're catching it early in the potential cycle to the upside. But this is what I look for in charts. Now, you got some overhead resistance. We're going to need to watch that and expect maybe we'll see some selling when we get up to about 54.5 or so. But I believe we're going to get there, consolidate, and then eventually break out because I do see money rotating into the space relative to the S&P. And AIG's been a really good stock in the space. So nothing really not to like except maybe just a little overbought, getting close to resistance. But a pullback, I'd really watch that 20-day moving average. Anything back near that 20-day, I think I'd be a buyer here.
All right, let's see. Kronos Group, CRON. Biotech, of course.
All right, another one in that cannabis space. Finally, I like this move back up above the 20. So volume starting to pick up a little bit. This is another one that's going to be in that aggressive category. You got to be willing to take some risks. But what I would hope at this point is that the stock has put in a relative bottom. So looking down here, see how it's starting to turn up? That is the recent relative low versus the biotechs. Here is a recent relative high. Like to see that break out to the upside. Of course, like to see the biotechs move up as well. But Kronos, I like the fact that this is now back up above that 20-day moving average. Now, if we get a big reversal this afternoon and close back below the 20, that would scare me. But right now, it looks like we're getting a breakout for the first time in a couple of months, getting up above that 20-day. That could lead to some additional buying coming in. So starting to turn more bullish here.
All righty. Let's see. Next one, an industrial, United Technologies, UTX.
All right. The other thing before I get into UTX, I didn't draw it here, but I remember talking about Kronos when it fell apart down here, saying that triple top breakout was at 14 to maybe look for a 14 test, and we've gotten that. So now getting this breakout, I think, could be confirming that bottom is in. All right, UTX. Let's see. Well, we got a 50-day test, also held support down here around the 130 level, which it held previously. About the only thing I don't like here is just the fact that aerospace is still struggling. Of course, a lot of that is due to Boeing. But here was a pretty good breakout. You can see a lot of tops. We gapped up above, came back down, tested this 130 area multiple times. So that would be the level I'd watch the downside. And as I was mentioning on an earlier chart, when you see the overhead resistance, I expect sellers. As a short-term trader, I'm not going to get all the way up here, have all these profits, and then sit on it and wait for it to come back down. I'm going to take my money and see if it can get through resistance. Here you can see that false breakout and reversal led to the move all the way back down to test support. This is your trading range right now on UTX. I like the stock. I think it's performing pretty well, but aerospace in general tells me to keep a stop in play. So I'd watch that 130 level pretty closely, but otherwise I like UTX.
All right. Next one up is Zillow Group, Z. Our only real estate sector.
Yeah, I like Zillow, and I think it's either Z or ZG, but I'll do the Z. Yeah, after it gapped up on earnings and went back down, it filled its gap, tested the 20-day, and it has been straight up. I think this one looks really good. I actually like the stock. You can see it's in a space, that real estate area, that has been holding up pretty well, holding on to holding on to absolute strength in the space. And finally, you're seeing the relative strength build. This has been straight up too. This isn't any kind of, waffling. It seems to me like a lot of money's beginning to come in. It's been good volume here on this push to the upside. So I think we're going to run up against resistance here short term. But beyond that, I expect a breakout, and I expect us to go higher. I think that you can see on the way down, some support came in around 45 after we broke down, struggled at 45 multiple occasions. I think we're heading for 45. Once we get there, I'd take the money and wait for a pullback or see if we can get a breakout. If we break out and the volume's there, I'd be right back in it. I think this one could go a lot higher.
Yeah, that's some pretty impressive relative strength there. I don't think I've seen those straight up lines that much.
You don't see it very often, for sure.
No. Okay, next one up is Thomas Reuters, our only comm services request, TRI.
Yeah, beautiful chart. It's hard to argue against this one. Again, when you take a look at the relative strength charts that I like to follow, really not going to see a whole lot that looks bad here. It's overbought, but you know what? It was overbought 3 months, 6 months, 9 months, 12 months ago, and the thing keeps going higher. Overbought to me is not necessarily a reason to get out. I don't see any technical problems here. And if we're looking at the group, and again, looking at the stock relative to the group, stock relative to the S&P 500, and then even recently, if there's anything that maybe is worth keeping an eye on, is just the publishers. I don't know. Over the year, it's kind of been up and down, but more sideways, but we are beginning to strengthen again. If we get that breakout above that peak that we saw back in June of last year, everything else in this chart looks really good. I think Thomson Reuters is a good hold.
All right, excellent. Let's see. Next one up is VERI, and that's Veritone.
Yeah, it's in the software space, and it's starting to show some strength, which is good because it was a horrible performer in software. I would have said up until the last 2 weeks, I would not even consider this stock, but it is starting to show a lot of relative strength. I think now we are beginning to change the character of this chart from one that was downtrending to one that's uptrending. Because it has been such a poor performer relative to software, I would maybe keep a tight stop. I would either use $8, or if you want to give it just a little bit more room, maybe consider this rising 20-day, because now, as you can see, it's gone from $6 to $9, little over $9 on heavy volume, and in just 2 weeks. That's a 50% move, clearly starting to turn up versus its peers. So this is an aggressive play, but I kind of like it, especially on a pullback anywhere near $8. I think your reward to risk gets a lot better at that point.
All right, let's see. How about Enphase Energy, ENPH?
Love it. It's a very risky play. It's in the aggressive portfolio that I talked about, that I went over on Sunday night at Earnings Beats in the webinar there. But I think this is a stock that, I mean, how can you argue with these relative lines? And this is in the renewable energy space. I was looking earlier. I think year to date, renewable energy is up over 50%. It's the only let's see. Actually, let me drag this up. It's the only industry group that was up more than 50% year to date. So you're in a good space, and it's one of the top performers. So very difficult to say anything negative here. Again, overbought for sure. I mean, it's been straight up, but a lot of times the stock gets overbought for a reason, and many times will stay there. So I don't know that that's necessarily a reason that I would be getting out of the stock. I think this one goes higher.
All right. Let's finish off the 10 and 10 with Yeti.
All right. Yeah, Yeti, kind of a disappointment recently with the pullback and selling, but let me pull that one up. Yeah, it's downtrending. It's starting to show many more bearish characteristics. I was looking for 28 to, or excuse me, 28 to hold. I thought that was an area that we would see some buyers return, and we have not seen that. But there was a number of times that we came down, tested this 28. I thought maybe when we held right in here and started turning back up, that was going to be a really good sign. But, opinions change, and mine is changing on this stock right now. I don't like the fact that we're getting up to the 20-day, can't get through. I don't like that we are now in a downtrend, failing to hold price support on this kind of volume. And also, when you look at the group, the recreational products going lower, and then the stock relative to the group turning lower, all of a sudden, we're seeing these breakdowns below prior lows. So these relative uptrends are no longer in play. We're starting to downtrend. So I think actually on a rally back, until we get above the 20-day, any rallies back close to the 20-day, I would sell. And I would wait to see some volume coming in and change the character of this chart, which is now one of downtrending stock. So no, this is one maybe 2 weeks ago I would have been much more bullish on than I am now. I'm not liking the way this has turned.
All right. That does complete the 10 and 10. And here are the symbols that we just went over. I'll have these charts that Tom just annotated in the Market Watchers Live chart list. Just go to the Articles tab, click on the Market Watchers Live blog, and you will find the link right there at the top. All right, I will be back shortly for the final market update after this message.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.
All right, now it is time for that final market update. Markets are down slightly right now. You can see the Dow is down just over 121 points, taking back some of those gains that we did catch yesterday. S&P 500, same. We are now down about, 0.46%. NASDAQ is also lower on the day, as well as the New York Stock Exchange. The NYSE is down just over 0.5%. Russell 2000, small cap, certainly not having a good day either. They have been in a steady decline since the open, and currently Russell 2000 is down 1.09%. TSX, Canadian markets, gap down, but now moving sideways. Treasury yields are lower on the day. We're looking at 2.386%. Volatility index hovering right around 15. UUP is up 1 cent, and gold is down 3 cents, reading 120.33. Boy, oil having a bad day, down over 3% right now for USO. Current reading is 12.72. TLT, nice big gap up and is continuing higher. Looks like we might challenge the high that we did get, looks like on Monday. So looking for more good information, looking for higher prices on TLT. It's starting to look pretty good there. As far as our sectors go, utilities are in the lead, followed by consumer staples and real estate, as well as healthcare. These four are your more defensive sectors, so it's not a surprise to see them leading on a down day. Energy, certainly one of the big losers, down 1.81%, and consumer discretionary is down a little over 1%. And that's all I have for the final market update. I'm going to pass it to you, Tom.
All right. I was just looking at the scooters, and I just wanted to point out Ford. If you look at Ford here, you can see on that little mini chart that we're back down to the top of gap support from that earnings report that Ford had out. So I also had pulled it up on a relative chart. I just wanted to show you. I'm still a little concerned with Ford. It looks great versus the autos. It's been one of the top performers. And it wasn't just the day of earnings. I mean, this move here, you can see, was already starting to build. So there were folks getting in ahead of that earnings report, no doubt. But when you look at the overall group, look at the autos breaking down to a new 52-week low. So this is the way I would trade Ford looking at this chart. I like it here at this gap support level. If I was going to trade it, I think it could go really quickly back to 1050. That'd be a 5% move. Could take a while to earn 5% elsewhere. Now, again, there's no guarantee, but this is the first level that I would be watching. You could maybe even go into today's low, or maybe the low that was established back here at the end of April, maybe 9. I can tell you what it was. It was at 9. Well, that was 9.95. Today was 9.95, sitting at 9.97 right now. You could probably keep a pretty tight stop and be looking for a move back up maybe to that 10.50 area. But this is one area that I would be watching for on Ford. If it doesn't hold, I would not continue to hold. I mean, I think we could go back down and fill that gap. And you've got to remember that it is part of a group that is being shunned right now on Wall Street. So if you start to break down on the individual chart, there's really nothing else to hold you up. So just keep that in mind. But again, that was just an example of how quickly using one of the tools here at Stock Charts, using these technical rankings, putting the scooters up. I always look at the large cap, mid cap, small cap, and I usually have the top up or top down just to kind of see what's going on. You can see there Ford because of this pullback, even though it's a big mover down on scooter, I think it could be setting up a positive trade. We'll have to wait and see. All righty, we're going into our final segment of the day, and that is, are you buying this? So what we're going to do is I'm going to give Erin a statement, and I'm going to ask her if she's buying it, both the statement, perhaps the stock or the index that I'm talking about, and then we'll flip it. She'll give me one. We'll go back and forth here for the next 10 minutes or so. All right, so I've got one for you, Erin.
Okay.
I was looking at Home Depot and Lowe's. Let me bring this chart up. I'll bring them both up very quickly. And I'll go into the relative charts. But you can see Home Depot gapped down with its earnings yesterday, rallied. Now it's back down a little bit, trading below its 20-day moving average. And the overall group, you can see, relative to the S&P 500, seems to just be free falling here for about the last month or so. But Home Depot doesn't look very good to me after earnings. And then Lowe's this morning came out. Look at this mess on Lowe's, down 11.85%. I don't think the downside movement, either of these stocks, is setting up an opportunity. So I would not buy either one. Are you buying that?
Oh, goodness. I definitely have to agree with you. I'm going to just steal the screen here so I can look at them. Lows, I love the symbol being low because right now that's certainly what's going on. Look at the PMO. It just jerked itself downward below the zero line. I mean, that's if you have a sign like that, you have to know that there's some serious bad blood going on in there. And you've got a really nice support level, though. So I think you could make a case for this area of support at 97.50 to hold. But, I wouldn't be looking for getting in on this one either. OBV is improving, but, I think Home Depot looks, I don't know, a little bit better. It didn't have quite that decline that we're seeing today on Lowe's, but, still, the PMO still looks pretty ugly. Like I said, volume is starting to look a little better. You can see that the positive volume is rising, and I think that's good even on that consolidation, although you want price to follow volume, and it's not really following that volume. I wouldn't buy either. I totally agree with you.
Okay.
Okay. I've got one for you. We talked briefly about Qualcomm and its new renewed legal problems. I know a lot of people might be sitting out there rubbing their hands together. Is this a good place to start looking to get back in for Qualcomm? It got very overbought, and now look at it. So would you even consider buying it at all? I personally, I think it's got I'm thinking GE in my mind right now. I mean, I don't think their troubles are that bad, but with a drop like this so quickly.
Yeah, I'm not gonna buy it. Meaning that I might buy the stock. I need to see. I would really like to see this reverse today. It's come off the bottom a little bit. You got great gap support here for if Qualcomm could reverse today and get back up, and I know it's still got a couple dollars to go, but if it could get back to that 50-day, which is at 70.66 by the end of the day, I would be more inclined to be a buyer of the stock, thinking that this is an opportunity. I mean, I was touting this stock, well, not touting it, but I was talking about this stock and saying how bullish it looked when it was at 90, and now here we are 2 weeks later, and it's at 68 and change. It's got great gap support between that 70.5 and 78 area. If I annotate that just quickly here, you can see that right there and up here Actually, I would even go down to the bottom of this candle right here on the gap. I think this is a key area. And you can see we traded into it earlier this morning, then went back down. I just need to see a strong finish. I agree in the sense I wouldn't do it right this second, but I could see some possibilities if we rally into the close. So I'm not going to buy it totally. So I'll say I'm not buying it.
Okay, fair enough.
All right. Let's see. I've got another one. Let's go with. All right, I got to go back to Nordstrom's, and I know you.
That's what I always say.
Exactly. I know you talk about shopping, and you like to shop. So I don't know what's going on with this company, but this is one of the big brand names. I don't know what it's like on the West Coast, but on the East Coast, there's Nordstrom's everywhere.
Oh yes.
And it's
rack is the best.
Most everyone I know likes the stores. So I'm looking at the chart, and they ought to open, a ski slope because that's what their chart looks like. It's $67 back in November. Now with the earnings today, and these earnings were really bad. I mean, the revenues came up low. Their earnings were in half of what was expected. Didn't miss by a penny. They're 23 cents versus 43 cents. They guided fiscal year 20 lower revenues and earnings. I mean, there's just nothing going on here. Now, you look at the chart and you say, well, there's just no reason to even consider getting involved in the stock. But when I pull up a longer term weekly chart, and I'm going to go back 7 years here on JWN, this is a really big level. I'm going to say $32.5, maybe $33. This is where it needs to hold. So my statement to you is, even with this earnings disappointment, it needs to hold this 32.5, 33 level. Are you buying that?
Yes, I buy that it needs to hold that level. Looking at my chart, I'll show you. I actually looked at it on a monthly chart, and you can really see on the monthly chart how important 32.50 is to hold. But the PMO is just looking pretty ugly. You just looked at the weekly chart, the daily chart. It needs to hold 32.50. I don't think it will. That's, Macy's. Think about it too. Macy's has been really struggling too, and they're also one of those big brands. I have to wonder, what really is behind that. But God, that kind of an earnings miss is pretty significant. So,
yep. Well, and the relative performance of Nordstrom's shouldn't have come as a shock. Looking at the earnings report, I mean, if you follow the charts, it was down. It was down from $66, $67 6 months ago to its, yesterday before before it came out with its earnings this morning. Yesterday it closed at 38. It was already down a lot, and the relative strength was horrendous on the chart. Yeah, so I mean, I don't really see any reason to get in just yet, other than that price support. You're really hoping that holds.
Right. I mean, maybe you want to sit it on a watch list, but really with that, that's why you have a strong earnings chart list. So I don't know that you'd be wanting to come back and try and scoop this one up. I just, like I said, I'm thinking GE. It's just got a lot to get over.
Yeah, I think the longer term monthly chart, in all fairness, is better than GE. I mean, GE's been a big mess for a long time. But there's no doubt that recently, I don't know what's going on there, but they've got some issues that they've got to correct. At least that's what Wall Street's telling us.
Yeah, absolutely. Now, I know Larry talked a little bit about the 30-year Treasury bonds. I'm looking at the 20-year because that's what I follow, all week long as part of my big four. And, it's sitting up here right on that resistance level. And, but I have a PMO buy signal. Look at we had it turning over, and now it's starting its way back up. Scooter looks great. I think that, the volume could have been better here, but, we had a couple down days. You've got to expect the OBV to fall somewhat. But when I look at the weekly chart, I think that we're going to see a breakout above, the level we're it's actually bumping up against. I think that we could, by the end of the year, and certainly maybe sooner, reach and start testing those all-time highs from 2016. Are you buying that? Do you think we could challenge those all-time highs before the end of the year?
I would have never thought so. but I'm buying it now. And I was talking earlier about interest rates and, the fact that, everyone's moving into treasuries and yields keep dropping. I did not expect it. I really thought that yields would go up, and I think eventually they will, but I don't think they're going to until the Fed first acknowledges that deflation is the bigger problem with the dollar rising and commodity prices dropping. The Fed has said that it's transitory. It may be transitory, but it's probably a longer period of transitory than what they're talking about. So I am buying it. I think that looking at this weekly chart, I mean, how can I argue with what this is telling me? I mean, we're trading higher, we're uptrending, we're holding the rising 20-week moving average. PPO is breaking to a new high. I can't get anything but I can't be anything but bullish the TLT right now, even though I don't want to be.
Yeah.
So.
I have to agree. So obviously that's the statement I made. But I think I don't think it needs to the end of the year. I think we're going to push up to that all-time high sooner rather than later.
Okay, that's very possible. I'm like I said, 6 months ago I would have said no way, no chance. But that's how the market turns, and you got to turn with it. Defense index. This is it, the DJUSDN. I mean, if I go out here, longer term on a monthly basis, you can see this was it was straight up for many years. And defense stocks tend to do pretty well in all seasons, but we've been going through consolidation, and we went all the way back down and tested that 50-month moving average, which we hadn't done in 7 years. And look at defense bouncing again and showing a lot of relative strength. So my question here is, looking at this group, there's one stock, well, actually there are several stocks I like in the group, but I'm going to give you one in particular, and that is L3 Technologies. And we only have about another minute or so, but we just broke out with big volume. I see a lot of strength, relative strength in L3, and I really like defense. So I'm going to say L3 is a solid trading candidate on the long side. Are you buying that?
All right. Well, let's look at this chart a little more closely. I like it. It is getting very overbought, but, the PMO's actually been higher than this. Scooter looks great. Look at the OBV. It's just totally confirming this uptrend that it currently is in. I think the only thing I'd be concerned about right now is a bit of a pullback because, that's a pretty straight up move there. So let me look at the weekly chart and then we can wrap everything up here. Yeah. I mean, there's nothing to argue with here. And notice that the weekly chart as well shows a PMO that's still rising strongly, but not overbought. So it certainly could rise more on an intermediate term basis. And I suspect the monthly chart's going to show a similar situation. Look at this breakout on the monthly chart over that 220 level and the PMO getting ready for the buy signal. I like it. I am totally buying it.
All right. Well, there you go. This is, are you buying this? You can see got some buyers not buying, but overall, good segment. That was fun.
Yeah, those always are. And we agreed a lot.
Yeah. And it's okay to look at it a little different. Actually, I think sometimes when we disagree, it gives everyone a little bit different take on it. So I don't think that's a bad thing at all.
Yep. What do you think of these results?
Here's a poll for the day. And I wanted to get kind of an idea of what folks do out there, whether you swing trade, buy and hold. It looks like it's a combination. Most everyone seems to swing trade that follows the show with some combination.
Yes. That's what I picked. I mean, I do buy and hold, but at the same time, I mean, I would say more often than not, of course, my trading, I do tend to do a lot more swing and position trading. But then, of course, you buy and hold. I mean, you're not going to switch it up too much.
Yeah. Only 4% day trading. Which
that surprises me because of what we do on this show. I would have figured we'd have more.
Yeah, except neither one of us really day trade. I mean, I'm short term for sure. And I've gotten in and out of a position before in a day, but that's not my normal. I mean, normally I'm a few weeks to a month or two, depending on the kind of market.
Indeed.
Well, we are at the end of another day. Do want to just bring everybody up to date before we wrap up the show. We've got the Dow Jones down 92, S&P down 10, NASDAQ down 38, Russell 2000 having a rough day down 15. All right, that will wrap it up. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.